All right. Good morning, traders. How are we doing? I hope we're having a great time. I hope you are also doing great. All right. Welcome to Minute FX. And then my name is the RM King Trader. So I'm Ezra. Anyway, Ezra, the RM King Trader. I want to first of all wish us an happy new year in advance. And also I want to wish us happy Christmas in arrears. The year has been wonderful. It has been, great. Had a lot of, lessons for us. Had a lot of knowledge for us. Had a lot of profit also, for us. And then we make some losses also, which we learned from. So I think the year has been awesome since it began. We are also still here. We are on earth. We are alive. We are grateful. So before I proceed, I want us to for those that have not subscribed to the YouTube channel, please try as much as possible to subscribe to the channel so that you can be aware when new videos dropped. You can also click on the notification bell so that you can be notified also when new videos are dropped. Now, a lot of questions has been asked from me about inducement, and liquidity, and then what are the differences between them? How do we avoid inducement and others? Now, when those questions were asked from me, I need to, I had to make some studies on the differences between them. I had to also, watch videos, listen to watch videos, or read PDFs, seeking knowledge of, the differences and, the similarities between them, just to, get more knowledge anyway. So, but then what I've come to realize is that both of them really do not have much differences. Now, so that will not cause a lot of uproar, I am saying this based on what I have seen in the market. I'm a synthetic trader. I trade currencies once in a while, but I'm majorly a synthetic trader. So based on what I've seen on synthetic, I realized that inducement and liquidity are not really far from each other. Yeah, they are not really far from each other. So some other persons can have different opinions, but this is my stand on inducement and liquidity. So inducement and liquidity are similar in certain ways. Now, inducement is a trap for either buyers and sellers to take a particular trade from a particular zone or area. That's what inducement is. Inducement are basically traps. Where liquidity are areas where stop losses lie. Is almost the same thing. Traps always, cost us stop losses. Liquidity also cost stop losses. So the inducement is an advanced, kind of statement for saying liquidity was swept around a particular area. Maybe liquidity was taken another. So inducement is practical, trap for traders to either take a buy or take a sell from a particular zone, So now I'm going to be using what is on my screen to quickly, run down and give explanations on what inducement and liquidity is. Like I said before, there's no, big differences between them. They are similar, and then, in same vein, I wouldn't disturb myself too much about them. So how do you know inducement? How do you know liquidity? Liquidity is not what I'm going to really focus on today. I'm going to focus on inducement, but it's going to make me touch also on liquidity. Is that clear, please? So let's let's go into the chart and let's see what happened. Now, pertaining to what I've drawn on the screen, you can see this is a particular high range, this place here. Yeah, it's a particular high range. Let me reduce this. All right, so that's the range high around here. So let's put markups there. So that's an high, a particular high there that created this low here. So it created that particular low. Now, so that's a range low. This is a range low. Now, I'm coming, let me draw this one. All right. Now, this is a range low. A range low. Now, what had happened is this was a range high, range low. We were expecting price to come down and start selling from here, but price broke to broke high. So now this becomes a practical BOS. So this is a BOS. This is a BOS. All right, so this is a BOS. Now, this BOS means that structure has changed from either a sell to a buy. So this is a BOS. Now, most of the people really are looking to continue the buy from this zone here. And then their stop loss are below here. Stop losses are below here. But bear in mind also that this range low here is also an external liquidity for price. So this is external liquidity. External liquidity was cleared to be upside, which means external liquidity to the downside has to be preserved. Now, but what happened is price came down and also cleared external liquidity below. At this point, everybody is confused. Okay, what will price do? So let's assume that this place here, because this is just a markup like a line chart, this place here didn't close below. Let's assume this was just a wick to the downside. It still means that we are still preserved. Exactly. So if this was a wick to the downside, that means this place is still preserved. Let me put something there. Okay, let me put an arrow there so that you can see what I'm saying. So that's that. So if that was a wick to the downside, then this whole place here was just a liquidity grab. So this place is a liquidity grab. What you should expect is that price will come and continue taking external liquidity to the upside, because this is completely a buy trend, So that range high had to be taken out as external liquidity. This range high here had to be taken out as external liquidity, and then price continue buying to the upside. All right. Now, where do the concept of inducement come? It comes around here, around this area where, most of us, feel confused about what the market is doing. So let me focus around that rectangle. All right, let me delete the rectangle so that we can see clearly. Now, let me pick it 2. Okay. All right. So this is a low, and this is a high. Okay, so that's awesome. Now, when price started selling down, it kept creating a low, a high. That was what it was creating, a low, a high. Most of the people that doesn't understand structure very well will be considering all this, specifically on this time frame, as structure break here. So structure has broken here, and then they want to continue selling to the downside. But in the recent, this is the range low, and then this is the range high. Now, all these plays are just price trying to, make up for liquidity so that people will get, liquidated after his move is completed. Now, price continued in this manner downward. That's amazing. Now, when price get to this zone that we first marked, this zone that was marked, price began to reverse. So price started reversing around here. So when price started reversing, we know that since it didn't close below, we know that price might continue to the upside direction. This is a daily markup. So if you had gone down to a lower time frame within this zone, you would have seen an entry model that you would have followed around here. Now, when price started going up and started going up, most of the people again would have wanted to enter from here. The price should continue buying around here. Now, this place here. Now, for those that understand smart money very well, at least to an extent, everybody is learning. But then, for those that understand smart money very well, this particular area, when we put our Fibonacci, first of all, put your Fib from the range low to the range high. Let's see what happens. Is that zone above 50% or below? Now, that zone is below 50%. Yeah, that zone is okay, according to Fib, premium zone and discount zone. So the Fib is okay. But then what next do we consider again before we can confirm that that place you hold? You need to check where IPA is located. Now, imbalance, specifically for those that might be struggling. So let's say there's an imbalance there. Let me delete my Fib. All right, so I'm deleting the Fib. Now, let's say there's an imbalance below this move here. Now, what you should do is that you should know that price was just trying to induce buyers, because there are two things that price moves on to. Like, to be very sincere with you, price moves to imbalances and price moves to external or internal liquidity. So price targets liquidity or price targets imbalances. So now, as soon as you see imbalance below here, just know that price was trying to induce you to buy. Now, it doesn't mean that price might not buy from there. Price will just react a little bit. You are happy. You are jumping. You are very excited. And, you just wanted, because your TP supposed to be here, external liquidity. You want to quickly, grab your TP and get out. Yeah, that's what you want to do. But price started moving. You just left the chart and then you went out. And suddenly price dropped down. And then, phew, stopped you out. This was an inducement. And according to what I told you earlier, this is also a liquidity zone. You should know that price will liquidate those that are buying here, because this is the range high. The whole structure ranged from this low here to this high here. So the whole structure ranges from this low here. Let me put it here. This low here to this high here. So let me mark this up. So this is another range high, and this is another range low. So let's see. This is a range low here. Now, price would definitely liquidate those that want to buy here, no matter what position it is. But price knows that there is imbalance below. So price will just come and then come to the IPA. But then notice that there's another zone here. And it's around our, if you want to buy, you buy at discount anyway. So you buy at discount and you sell at premium. So I want to buy at discount. And this zone is also at my discount level. Now, what I'm waiting for is, okay, let me check below this price. Okay, is there any imbalance there? If you see an imbalance below here, below this zone that I just marked, then know that price would definitely somehow still tend to liquidate those that are buying here before it continue buying. But unfortunately, there were no imbalance here, and price came into this zone and then continue buying. That is just exactly what inducement is basically is. Inducement is powerful, but then you need to really understand. You need to really understand what inducement really is. So if you don't understand what inducement is, you will be, struggling to take a good and reasonable trade. So already for me, since there's imbalance below here, I already know that, okay, price might just be looking at trapping me around here. So I will not really entertain such trap. So I am waiting for the IPA to get filled. So IPA gets filled, then I look for entry. Now we continue. This is another high that was, created by price. Price created this high, and then we were expecting that price should retrace at least 50%. I'm telling you now that price had to retrace at least somehow, sometimes, not every time, but price should retrace 50% before we, as smart money traders, start considering, the probability of it, buying or selling. So now, when price started moving, this was a range high. This is a range high here. So this is a range high here. And then price was supposed to retrace down to 50%, but price. Now, there are imbalance, there are IPAs here. There are IPAs around here. And then price had already broken structure to the upside. So we have this. Now, I'm not talking about any other thing than inducement today. So when I keep releasing videos, I'm going to be talking more on other things. Now, price had broken this. And then most of the persons wanted price to come into this place, the zone around here, and then they start buying. Yeah, it's not wrong. Yeah, if you see certain things I'm going to be telling you after now, it's not wrong. You can take your trade there. But if you do not see it, just forget it. Allow the price to move on. So price came and then broke to the downside. Then came back to retest the zone here, and then come down. Now, to everybody, this is a break of structure. So everybody want to actually, want to maybe continue the sell trend, and then others. What price did was price broke structure in order to come and fill an IPA and then test a zone around here and then continue buying. Do you understand that? So price continued buying. From here, after filling the IPA, price continued to the upside. Very important that you understand what an inducement is. Now, for you to perfectly understand inducement, you should know that inducement will always have a characteristics that depict that is a liquidity zone. So when you see those kind of what they call it, the properties of liquidities around a particular zone, just try as much as possible to avoid it. Now, sometimes inducement perceived zone also played out. Now, how do you take advantage of any zone in the market? The best way to take advantage of any zone in the market is to try as much as possible to always understand how to take your trades from lower time frame perspective. Now, I'm going to be showing us few things in the market today, just from the rechart. I'm going to show us few things and then we're going to go. I believe this is understandable, so let's go to the rechart quickly. All right. So this is the rechart. Let me go to H4 so that we can see some things. Let me see what is happening on H4. Then from H4 we can know what is happening in the market. Okay. All right. I think I saw something earlier. Let me go to H1. I want to show us, structure and then, inducement. I saw something here. Now, let's quickly do this. Forget about all these things. There is a zone around here that got broken on this H1 time frame. A zone here was broken. Yeah, this trade, I think I took it, but I didn't stay in it. I would have been in it now, but I did not. So this place got broken. We had our BOS. So we have our BOS around here. So now, when we have our BOS here, we try to wait for, another break of structure to the upside, and then we have another one. So this was a break of structure to the upside. Another one. All right. Now, that's why I told you price targets zones of imbalances and then areas where liquidity lies. All right, but I'm a zone trader anyway. I look at imbalance too, but I don't really trade imbalance often. So this is an IPA. See, this whole zone is an IPA, imbalance area. And then that's where you should look for what price wants to do around here. So I'm not going to talk about this. I'm going to area where inducement is found, okay? So I want to show us the area where we have inducement and then how price dealt with it. Okay, so let me delete this. Okay, don't let me delete, let me shift it down. All right, now watch this very closely. Now this is the range, the range high, and this is the range low here. This was the low that broke that high I just marked. This low was responsible for creating a new high. So this is the high that zone, that low created. So this is the high. Now, someone sent me that, okay, he wants to start buying around here. It's not a bad area to buy. Yeah, it's a very good area to buy. But then, this area, let me put fib so that you can see that it's a very good area to buy. All right, so that's my fib. So that zone is below 61.8. So this zone is really a very good zone to actually buy. But then for me, the way I trade, I don't really trade, like this. I check area where, so most of the time I used to scale to maybe a little lower time frame. But of course, I know that this place is going to be liquidated because it wasn't the source of the move. So I wasn't really focusing on this. But then you will notice that what price did was, I want to show you so that you can see it yourself. So, but when price got to this zone here, price reacted a little bit. Now, see the reaction, see it here. Price will always react to those zones, but price will not continue from there. So price reacted there and then came down and stopped everybody out before it continued buying. Now, don't let us take too much time. You should understand that sometimes area of, okay, yeah, fine. We were looking at this area also. On our time frame, I'm looking to sell around here. Now, for those that trade B500, so this is where you should look around to sell just before I leave this asset and go to another one. So you should look around to sell around here. So I am here waiting for lower time frame confirmation to take my trade to the downside. Okay, so if I see lower time frame confirmation, I'm going to be selling from there. But if I do not see, yeah, there are other criteria for me to look at or look upon, but I would love to see a lower time frame entry around this zone before I start selling. So this is how inducement work. Price will just show you mini structures and others to show that, okay, it want to, price might react from there. This is a perfect structure level, but then price came and cleared liquidity below it and then continue. So this is the same thing as inducement. Price induced buyers and then, came and stopped them out and continue in their direction. So it's the same thing over and over. I'm trying to look out for another one. All right. Yeah. Now let me show you this one. I actually took this trade. I sold it. I might send it to, what's happening? Okay. So let me show us this. Now this is a very good trade, that I took. Now this is a high. And this is, now for me, this is a low. What's happening? All right, but this is the low, this is the high. Now let me show you something on higher time frame. This thing should shift now. Sorry about, I think the network is just, all right, so let's just go ahead. I want to show you an inducement, another example so that we can go. Now see it. This is my range low, the new low that was created, and this was the high where it came from. See the high here. That's where you should have your highs. So that's where my highs was. Now I went to H1. I wanted to check for areas. Okay, let me see imbalance on H1 so that I can know. I'm a zone trader, like I said, but sometimes I look into imbalances. So let me delete this. All right. So what did I see? All right. So let me show you what I saw. I saw an imbalance here. This was an imbalance that I saw. So that's the imbalance I saw. Okay, so I saw this imbalance. So I know that, okay, that's serious. All right, so okay. So as soon as I saw the imbalance above here, I know that this place, anybody that is buying there will be liquidated. This is a perfect example of inducement. So people here were induced to sell. Yeah, everybody here was induced to sell. Some people sold and then it reacted a little bit and then stopped them all out and then came into the imbalance and started selling. The same thing over and over. When you want to identify an inducement, if it happens with this structure on a higher time frame and then that's imbalance above it, just know that it's an inducement and it's the same thing as liquidity. So this place will be liquidated. This is liquidity. Perfect example of liquidity. That's why I didn't take any trade there and I waited there. Now, a lot of persons will be asking me, okay, how did you take your trade? Okay, let me show you so that we won't. All right. So let me delete this. All right, let me go to, this is H1. So I went to M15. I wanted to see what happened on lower time frame. Let me see what happened on M15 around that place before I take my trade. So let's go. I hope this thing does normal. All right. All right. So I believe you can see my chart. This was the area. Okay, this was the IPA I marked on H1, and then C price came into it. Price came into it, and I was waiting for break of structure. Now see what price did. Price broke structure here. That's a BOS. I didn't take that trade here because it didn't really come back to where I was expecting it. And price continued and broke structure downward again. Now, as soon as it broke downward, that was when I took my trade at the retest of somewhere around here. There are zones I used to pick. So around there was when I took the trade and I started selling. So it's just same thing over and over, no stress. You can identify inducement by inducement and liquidity are not far from the same. All of them are traps. All of them are the same thing. I think it's just different languages that were used for it. So that's liquidity area. That's how to identify areas of liquidity. All right. Okay. So I think let me check one more asset if I can see on any other asset. Let me see. I don't know. Let me check. I wanted to use let me use boom and crash majorly, but then maybe one other videos I'm going to do after now on inducement and liquidity. I'm going to use other asset because I've not checked through other asset, but I will check and then send that. Okay, let me check C300. Let me check C300. All right, fine. I'm coming. These charts are very bad. Okay, but then no problem. Wow, this is amazing. I saw something interesting on C300. Okay, I was supposed to be in this buy, but I'm not. So I don't know how it's going to work it, but it should sell down. So I'm checking for something on C300 and then I'm going to round up quickly. So let's see how far. Let's see how far. All right. Okay. Okay. If I can't see anything, the mouse is misbehaving anyway. But then let me leave it. Okay. Now wow, I can't find anything here. Let me check. I don't know why the mouse can't go far, but then let's just check another. I don't know. Oh, C500. Let me see. Let me see C500. All right, let me show us something quickly on C500 in case for those for learning basic purpose. Now, C500 had already broken this high. Now, like I said before, I told you how do you understand the inducement. Now, I'm not saying that price might not move there, but price had already given some sort of that place was a liquidity graph. So this zone is an high probability zone where we expect price to reverse from. That's if I see a lower time frame confirmation, I'm going to take this. But if I do not, I'm not going to really look into that zone because of certain reasons below. Anyway, I'm seeing, let's go to H4 so that you can see clearly. On H4, you can see clearly. On H1, there is nothing showing. I don't know. We can't see much. Okay, all right, that zone is a very good zone. There are no imbalance below, and then there's no reason for price to really come down except it wants to clear liquidity around that place. So I really like that zone. It's a very good area to buy. That's if you see a lower time frame confirmation, you should be able to buy. So no imbalance below, so that's a good area. But assuming there are imbalances here, let's say you find imbalance below here. Maybe there's a zone here that has imbalance here, then this place might just be an inducement and price might not actually move from there. But since there are no imbalance here, then fine, that place is a good zone to continue buying. All right, thank you, cheers, and God bless. Bye.